No, I want you to explain, right? We were talking about something that's very important, right?
Yeah.
And a lot of people don't understand this. And you touched on it when we started, but I'd really like for you to go deeper into it. Ne?
Okay.
You talked about the difference between renovations
Yeah.
and repairs,
Yeah.
right? Can you please just distinguish between these two? What is
Yeah.
the difference between those two?
Okay, so repairs, remember, it's things that are already existing, right? So let's just say that there were tiles. However, now you find out that they were in bad condition. Maybe something did happen. Now that's repairs. But now renovation is that I'm adding on something that was not there. So it might be extending the rooms. It might be I'm adding on an aircon. So this might be for generating or increasing my income. So those are the two, man. Yeah.
So now looking at the two, which one are considered when you're looking at tax and the different sides of tax?
Okay. So now repairs.
Guys, just as a disclaimer, right? We are speaking about this as a property investor based on what we have been through.
Sure.
If you want more information, please do consult a tax specialist about this.
Yeah. Or you can even Google it, guys. You can Google the different when it comes to what's this reinvestment strategies when running a property. Look at it that way. So reinvestment strategies when running a property, you're looking at repairs. Now that's when they look at it from an annual perspective, right? Whereas with renovations, that's when it will be handy when it comes to when I am selling the property. So when I'm selling the property, remember there's now capital gains.
Yeah.
So let's just say that I bought it for 400,000 and then I sold it for 600,000.
Yeah.
So now if I'm sitting down with my accountant, I'm like, hey Joe, let's run numbers. So what I'll be showing him in terms of my expenses, it will then be the renovation costs there. Whereas on a yearly basis, when I'm sitting down with my accountant, he's not interested every year when I'm filing. He's not interested in a renovation cost. He's interested with the repair costs.
Also, basically what we're saying here is that with replacement, the thing has to already be there.
Yeah, repairs.
Repairs.
Yeah.
And then with renovations, if it wasn't there and then you did something, that means that it's renovated.
Yeah.
So say for instance, if we had the old windows and we're taking out the old windows and we're putting in new ones, would that fall part of repair or renovation?
Man,
because they were not broken.
Yeah.
So you renovated. You basically renovated that.
Renovation, bro. That's
It's a tough one, man. Because what if the window was cracked?
I guess
now I'm replacing this window, but I'm putting in a better window. I think it's just that thing of how do you and your accountant actually speak about it, right?
Yeah.
Because it's like also with the aircon, right? It's that thing that we were talking about, that an aircon might be looked at as a renovation,
sure,
right? But what if I did have that aircon and this aircon doesn't work anymore or it blows out dust? Now I need to replace that aircon. Now it's no more a renovation, now it's a replacement. So now how do we then say guaranteed that no, this wasn't there?
It's really interesting, Lewo, you know, as you did mention in terms of how do you support your case, because I'm also looking at it from a perspective whereby imagine looking at it from this way, right?
Yeah.
If someone, because they're trying to run away from tax, now they are doing heavy renovations every year. So now to SARS it becomes like, hey, this one,
yeah.
So that's where the interesting part comes through. Hence, you really need an accountant, guys. Personally, I prefer an accountant who understands property, because now with an accountant that understands property, they like a specialist and they will be able to advise you before you do this. Imagine how painful this would be if you engage in heavy renovations thinking that you wanted to decrease your tax threshold, only to find out that it will be disregarded. Or you're about to sell and then they tell you, oh, these were repairs. So you don't want to find yourself in that situation, bro. So
it's that thing, every year you need to have an annual meeting with your accountant. And the reason why we're saying every year we need to have an annual meeting with your accountant is that they need to tell us if anything has actually changed. So having a conversation annually with an accountant is because there are new laws that are actually being placed. Sometimes it might happen that you are in a situation whereby you used to do this with the accountant, however, it won't be applicable this year because of that situation, right?
Yeah.
So it's important for you to have an annual thing with your accountant.
Yeah.
Now there's a new law.
So can I just address this, right?
Yeah.
There's in the comments there. Dima's saying that the accountants let's only do, right?
Hey.
Guys, I've seen a situation whereby someone was owing about 300,000. And the reason why they were owing 300,000 is because of they didn't know how to structure their business, right? Once they got their accountant, this bill dropped by a whole 100,000. Now, if you're looking at me paying somebody, let's say 5,000
50,000
for a bill like this,
I'd rather have a
any day.
I'd rather have a relationship keep at 50,000 than to pay 100,000 to SARS.
That's how the game is, guys, because I'll tell you, we've done big mistakes, and I'm also going to give you guys the mistakes that we've done. And that's why, looking back, now I see the importance of an accountant. Let me give you the example that we made, guys, the wrong thing that we did. And at that point in time, we didn't know. So it's one of our first projects, and then we budgeted 100K to fix, but now you know renovations, guys. Total renovation ke 100 and let's say it's 190,000. So now we short ka 90,000. Then what happens is that if you don't know how to run your business as a proper business, now what's going to happen is that yes, you are going to source funds, right? But then what we did that was wrong is that these funds that we sourced, I asked another bror to pay directly my service provider. So if this person pays directly my service provider, now the challenge is that money didn't come to my account. It didn't register. So if I have 200, let's say after the project, 200,000 that came to our pocket. I'm not saying 200,000 came to my pocket. I'm just saying if at the end of the project, hopefully 200,000.
And now, you're also not saying that 200,000 didn't go into your pocket.
You never know. So get 200,000 that came, right? But we all know right now on this live that we were short 90,000. Let's say this person that borrowed us this, he said that he wants 50%. So now 50% of 90,000,
45,000.
Is it?
Yeah.
45, guys.
Yeah.
So I know that we need to pay him 45,000 plus 90,000 again. 45,000 plus 90,000.
45,000 plus 90,000.
Yeah.
45. 90. It's 135,000.
135.
Yeah.
So guys, we know that we have to pay this guy back 135, right? So then we're going to say the 200,000 minus the 135, and then we're left with 65. Yeah, 65,000. So according to us, we all know that our profit, right, is 65,000. But now remember, because of that silly mistake, because we didn't have an accountant, after 2 years, 3 years, after doing a lot of projects like this, we know that our profit is 65. But when SARS is looking at us, it's 200. The biggest mistake was that it didn't register in our account. That money came in
As a loan.
We need to pay this person at X amount interest. So you see now, looking at it where we are right now, is that me paying an accountant, let's say the 5,000, who was going to advise me before doing this silly mistake, my profit wasn't 200,000. I'll do this any day. Any day.
Sure.
The thing about this one, right? It's nice that we started about the accounting side and now we're closing it the legal side, right? As with property, as long as you plan to own a property, you need to know a little bit of accounting. You need to know
a little bit of everything.
Little bit of the law, because it doesn't make sense for you to be on the other side and now you're going to find yourself always not benefiting from certain decisions. The thing about it is that I think where people espouse, they get it wrong in a sense whereby this one is marriage, right? As I'm going to explain according to myself and label. I'm not speaking on behalf of the gents, right? So if there are gents, you can still copy and paste this when you're having that meeting before you talk about this thing of getting married. The reason why I would go for out, and out, eight. The reason why I would go for out, right? It's not even a thing whereby you're saying that I don't want my spouse to benefit, right? you're looking at it from a perspective, and this is something whereby we are removing emotions, guys, and we are having a honest conversation now, is that people need to realize, especially when it comes to property or in business, is that the more you grow in property, is the more debt you become in. So yes, somebody can say, oh, you, Lebu has 3 properties. But then you're not understanding what that means. Because now if we are saying, let's just say each is going at about 1.5 million. Okay, 1.5 million multiplied by 3. So if 4.5
million, yeah.
Not even looking at it from interest. Remember when banks charge interest. So when you're looking at how much the bank charges in interest, most of the time it's about double. So this guy, when you're looking at it from, yes, he's collecting, let's say 15,000 from each, he's got 3 properties, and then you're looking at it, or no, let's go for in community, right? But now if something goes wrong, that's going to be on you as well as the lady.
The whole family, bro, is affected by this.
So now the loan that you took was 4.5 million with interest, let's say 4.5 times 2. That's like 9 million. I've seen couples whereby the business went underwater. All of a sudden now the lady was dragged in to something that she didn't even know. I might have taken a wrong decision in terms of there's potential in this property, but unfortunately there wasn't. So now does this mean that, I know they say through thick and thin, but the nice thing they never said through interest and debt.
Yeah. Yeah. And it's not to be honest, right? It's not a smart move, especially looking at your partner's lifestyle, right?
Yeah.
So our lifestyle, someone would say that, hey, those guys' lifestyle is reckless, man. How can you be taking loans like that, right? But now that's what's working for us right now. And man, I never hope this will happen to us. But if it does happen that your properties get affected by, say, for instance, if people decide that they don't want to rent anymore, that means that all of those properties are going to ruin my credit score. Now, if they are ruining my credit score, what about my spouse's credit score? Because it would be unfair for her credit score to also be ruined.
Yeah.
Because now, at the end of the day, our credit score is both ruined. If we wanted to go take a loan for a house, or she wants to take a loan for whatever that she wants to do, now she's in a problem. Now she's in a situation whereby she's blacklisted because now both of us, our credit score is ruined.
Yeah.
So that's why I would say out would be perfect, because now at least at the end of the day we know that, yes, as the provider, I would be coming through with that. But now if anything does happen to the business, we know that she's still also good.
Yeah. And here's the thing, guys, right? Remember that, and this is where a lot of people get it wrong, is that even if it's out, it doesn't mean that, yes, we are married out of community. But at the end of the day, if something happens to me, and you find out that the spouse was taking good care, I can still say we are married out of community. But if I do pass away, the will still says that it can go to her.
Yeah.
So that's my conclusion. I just finished it off that way because a lot of people, as soon as they hear out, no, you're planning for exit, no, this, no, that. But then really understand that we're trying to protect you. We're trying to protect you. And as I did mention, to close this off, is that it could still be written in the will that, yes, I am going to pass away, and yes, I was married out, but once I pass on, then it will come back to you. So in that way, it's a full circle. A lot of us as beginners, we have the lease agreement, 1 page or 2 pages. And now it becomes really difficult for us. It becomes really difficult for us to be protected, right? And not necessarily understanding that lease agreements are legal documents. And it's the same as someone will say that, guys, a lease agreement is expensive. Let's say it's about 800, a proper one from TPN. Now, if we don't have that, or we also don't have a management company number 2, because from our side, we're working with Cispet, they are a legal management company of which you have to do, especially when someone is not paying you, there's a certain manner of approach to dealing with eviction from the letter of demands. You don't just send a letter of demand. Number 2, you don't just put on any type of interest. There's a certain way that one has to move. And unfortunately, it's because a lot of us do not know how to go about it. And you find out that these tenants that do that, they know that. And that's why they use that to advantage. So, Siske, I would say that, yes, that is a thing. And then it makes it worse, especially as a beginner property investor or as an investor who's doing everything on their own and they have little to none knowledge of how to deal with an eviction. So from our side, we already know from the onset that Pat, as our lawyer, she already knows that letter of demand are sent on this day. They're sent on this day. And they already know that even with our lease agreements, it's about 17 pages. Speaking about what you just mentioned right now in terms of certain things, this is me taking out our card. As investors, especially myself and Lew, when we're dealing with a lease agreement, it's not your normal lease agreement that one just downloaded. Hence, I was saying that it's 17 pages. So there's certain clause that you have to then put that will protect you. Even in a normal sale, right? There's certain points that protect investors. So I would get a legal team before just giving out a lease agreement.
And also understanding the eviction process. I think a lot of people don't understand the legal process, and this happens a lot with your investors, right? So 1 month would go by, your tenant hasn't paid, you haven't done anything. When you just sent them text, you have to pay me. Second month goes by, they haven't paid you. Third month, you let it go, right? On the fourth month, that's when you go to their house and you're like, Mpet, you have to pay me. They're like, okay, they give you 2,000. And then you're like, okay, it's fine. Then fifth month, they don't pay. 6th month, they don't pay. So as time is going, you are not doing the correct process.